Drive down any suburban street in America. About 1 in 12 houses is worth more than $1 million. You will not be able to tell which one. The Toyota is paid off. The house was bought in 1998. The kitchen hasn't been remodeled since the Clinton administration, and the person inside has been getting a check in the mail every single quarter for the last 30 years paid by companies you have forgotten exist. Today, we open the file, the Dark Dividend File. According to the most recent Federal Reserve data, roughly 8.3 million American households are now worth more than $1 million. That's more than double the number a decade ago. And the most fascinating thing about this group isn't how much they have, it's how invisible they are. We have this mental image of a millionaire, yacht, mansion, Lambo. But the actual statistical millionaire in America in 2026 drives a 6-year-old car, lives in a house they bought in the late 90s, and shops at Costco. The wealth is real. The lifestyle is not. And here's the part that breaks the narrative. Roughly 73% of them built it themselves. No inheritance, no family money, no tech IPO. They did it the most boring way possible. And that boring way is exactly what we are going to break down today. What I am about to show you is the single most reliable wealth-building mechanism in the history of the American stock market, and almost nobody talks about it. But first, let me ask you something. If this strategy is so reliable, why doesn't anyone teach it? Why is every finance YouTuber screaming about crypto and AI instead? Because it doesn't sell courses, it doesn't move fast, it doesn't make good thumbnails, and it works better than every single one of them. Let me show you the math. In 1986, you invested $10,000 into a basket of companies that paid consistent dividends. You set it. You forgot it. The dividends got reinvested. You did nothing else for 40 years. By 2026, that $10,000 was worth $1.2 million. With dividends reinvested, your average return was roughly 11.4% per year. For comparison, if you had just bought and held the S&P 500 in 1986 with no dividend reinvestment, your $10,000 would be worth about $312,000 today. That's a great return. The dividend compounding strategy beat it by nearly $1 million, with zero effort, zero trading, zero screen time. And here's the part that makes the quiet millionaires invisible. They never sold. They never rebalanced. They never told anyone. The brokerage statement showed up in the mail every January. They opened it, glanced at the total, and went back to their morning coffee. The total dividends paid out to a single $10,000 investment in this kind of portfolio over 40 years, $1.4 million, paid in cash while you slept. While the market crashed, while everyone else was panic selling their tech stocks in 2008, these checks just kept coming, every single quarter. This is not a story about a Wall Street genius. This is a story about a person who bought the right companies, reinvested the dividends, and gave the strategy 40 years to do what it does. But where do those dividend checks actually come from? Because the polite answer is shareholder return. The real answer is darker. And the real answer is the one the quiet millionaires actually understand. Every dollar a company pays as a dividend has to come from somewhere. It comes from the company's free cash flow, from the money left over after the company pays its workers, its suppliers, its debt, and its taxes. The dividend is what is left when a business has finished doing business. In 2024 alone, S&P 500 companies paid out roughly $1.7 trillion in dividends. That is more than the entire GDP of Switzerland. That is real money, moving from real corporate earnings into real brokerage accounts. And the average investor, including the average person watching this video, owns a slice of it, whether you know it or not. If you own an S&P 500 index fund in your 401k, and roughly 60% of American workers do, you are already a dividend investor. You just don't feel it, because the dividends are automatically reinvested. The compounding is silent. The wealth builds while you sleep. There are 65 companies in the S&P 500 that have paid and raised their dividend every single year for at least 25 consecutive years. They are called Dividend Aristocrats. And the quiet millionaires? Most of them are not chasing the next AI stock. They are simply holding a basket of these. But here's the trap, because there is a difference between a dividend and a yield. A 3% yield on a healthy company is real wealth. A 12% yield on a struggling company is a warning sign. The quiet millionaires never confuse the two. Most retail investors do. And that confusion is the single biggest reason most people never become one of them. If you wanted to do exactly what the quiet millionaires do, it would look like this. 4 steps. No screen time required. Step 1. Buy a basket of 15 to 20 Dividend Aristocrats. Spread the bets across at least 4 sectors: consumer staples, healthcare, industrials, utilities. The basket should be boring on purpose. If your spouse can't pronounce half the tickers, you are on the right track. Step 2. Turn on dividend reinvestment. Every dollar that comes back to you buys more shares. This is the engine. Without it, you are just collecting pocket change. With it, you are building a compounding machine. Step 3. Do absolutely nothing. For 30 years. The biggest mistake most investors make is interfering with a strategy that was already working. The quiet millionaires let the strategy run. They did not panic in 2008. They did not chase Bitcoin in 2017. They did not rotate into AI in 2023. They let the compounding engine do the one thing it was designed to do. Step 4. The mistake. Step 4 is the one most people get wrong. They check the portfolio too often. They panic when the news cycle turns. They sell during a crash. The single biggest reason the quiet millionaires stay quiet is that they never look. The moment you start watching, you start trading. And the moment you start trading, you stop compounding. So the next time you drive through a normal neighborhood and wonder whether the person next door is rich, the answer is more often yes than no. They just don't look rich. They never did. The wealth is on the screen of a brokerage account they open once a year. And the engine that built it is one of the oldest, quietest, most reliable forces in finance. That's the file. The Dark Dividend File. If this video made you rethink what wealth actually looks like in America, subscribe. We open a new file every single week. Next week, we are going to look at the 4 dividend cuts that wiped out $200 billion in wealth overnight and the 5 ratios you check before you ever buy a dividend stock again. I will see you in the next one.